RealAgriculture.com Canola School, brought to you by Syngenta. We're here today with John DePutter from DePutter Publishing out of London, Ontario. Welcome today, John.
Thank you, Sean.
Okay, John, we're going to talk about the canola markets today. We're getting in late February. Farmers are sort of trying to figure out what their cropping intentions are for this year. What are some of the things that they should be thinking about regarding the canola market as we head into springtime?
Well, Sean, one thing that might be worth keeping an eye on is the seasonal tendency of canola to rally heading into spring. I mean, very often the market will rise somewhat during the March time frame through much of April, and in a lot of years you'll see a peak in the market late April, early May. Certainly not every year, but there is a seasonal tendency toward that.
Is there a reason for that?
Well, there's several reasons. I mean, one of them is that very often farmers' minds are on other things than the market at that point. So people aren't selling a lot of canola, so the market tends to rally. Also, there tends to be some weather concerns creeping in. Will the crop go in? What's the acreage going to be? And the market tends to build a bit of a weather premium in heading into early May. So if we get a rally this year in that late April, early May time frame, that could be a great opportunity to make an incremental sale of old crop canola and get some new crop on the books if you haven't got any on the books already, or add to your forward contracts if you do have some on the books. So that's one thing to watch for, that late April, early May seasonal rally.
Okay. So there's a lot of concern, or I guess a lot of farmers in Western Canada are talking about. They're looking at the grain and oilseed markets compared to 2 years ago, and they're seeing obviously lower prices. There's a lot of discussion about the Durham market and some of the things that are going on there. Some of the other grains. Is canola sort of destined for that sort of that big drop like some of the other ones have felt?
Well, that's a good question, Sean. There are a lot of risks these days. We are doing business in a very uncertain world. We've got a jittery economic condition around the world. Certainly things look a lot better than they did a year and a half ago, but nonetheless there are still some macroeconomic risks that could undermine a lot of markets. There is also the risk of a huge South American soybean crop that weighs heavily on other oilseeds, including canola. We have to monitor other commodity markets, including crude oil and so forth, because there's no doubt that the relationship between non-agricultural markets and agricultural markets is quite close these days. All commodities are intertwined. They're intertwined partly because big fund money plays an increasing role in the commodity markets.
Is that
so
still
there are risks. There are risks that these markets could fool a lot of people, and could at some point, as we wind our way throughout the coming marketing year, trade at levels that are well below profitability. So I guess in addition to the seasonal rally idea that I mentioned, I would also suggest that it's more important than ever in this coming marketing year, in my opinion, to pay more attention to profitability than just about anything else. 2010, 2011, in my view, is a year during which risk management and close attention to moderate profit margins takes precedence over optimizing the price. You've got a good price on the table, don't look too long at it.
Right. So in terms of farmers trying to figure out, focusing on profitability, in the past we've seen some wild swings in, or I guess unexplainable swings in basis. Is that, can we expect that sort of situation coming into this cropping year for canola?
Absolutely. I mean, basis conditions are changing throughout Western Canada. We've got an increase in crush capacity, so the locations of the prairies where you see the strongest basis will change. You'll see some relatively stronger basis near some of the newer crushing points, perhaps. When the trade needs canola for export out of Vancouver, you can see some strong basis levels at export points, that sort of thing. But the basis is still not going to form the primary component of the profitability on your farm. So while it's important to monitor the basis and get some basis contracting done when the basis is good, and while that component of the final price you get is important, it doesn't take precedence over the basic cash price that you are looking at for your farm and the profitability that that cash price means to your farm. So, bottom line, monitor the basis, know a good basis when you see one. For the most part, avoid a poor basis when the demand is not there and it's reflected in a poor basis, but don't get too hung up on it. You've got to look at the cash price. That's what ultimately represents your return.
So John, you look at all the different the markets that are out there for agriculture. For Western Canadian growers, do you think that canola is has the potential to be one of the more profitable crops for farmers this year, or one of the choices that they make?
I wouldn't kick canola out of my rotation. I think it's important to be diversified where possible. I think it's important to maintain a rotation. I think it's important to make decisions based on agronomic situations, logistics, storageability, historic yields, all of those things. I think most farmers understand that. I think canola could be as good as anything. This is still the miracle crop for Western Canada over the course of the last 20 years. Canola has paid a lot of bills. It's been a very critical crop for Western Canada, and this is still a premium product. I mean, we're going to have lots of soybeans, I think, the coming year. Canola should be able to demand reasonable premiums over soybeans because of the premium value in the oil, and ultimately in the meal as well, provided that we can straighten out some of the meal export issues with the United States. I also do think that China is going to continue to need our canola, and that although the blackleg restrictions are certainly limiting our exports to China to some degree, that China is still in the market. They're still taking Canadian canola to crush plants in certain areas, and exports of canola will continue to be a bright spot for Canadian cash croppers.
Perfect. Well, John, thank you very much for joining us this morning, and we'll talk to you soon again.